Well, let's move now to one of the companies that's reported today, an interesting company exposed to various consumer sectors in the economy, Iliad Africa. Their full-year headline earnings per share more than quadrupled to 46 cents, although it's a positive earnings now from a loss the previous time. The building suppliers revenue rose 6% to mainly due to strong performance by general building materials division. Joining me now to look at those earnings is Eugene, who is the CEO of Iliad Africa. Hi, Eugene. A lot of companies reporting at the moment are using words like tough, challenging conditions. Given these conditions, we're quite pleased with our performance. Is that the sort of language you're using?
Yeah, I concur, David. So given the conditions, pleased with 2012. We could clearly see as we went through the year some pretty good growth up to August last year. As we entered Q4, those growth trends softened, and that's continued into the first quarter of 2013. So not business as usual. It is pretty challenging out there.
Just remind us how the business works and what are the factors that affect it. You've got your building materials essentially. You're exposed to what sectors?
Well, 93 building material stores around the country, split between general building materials, a typical significant merchant where you can buy anything you need to build a house or an office. That's about 75% of our turnover. Then a few specialist stores, specifically around ceramics, sanitary ware and so forth. That's more exposed to the finishing end of the market. Drivers for the past few years impacted, of course, by macroeconomic factors, but also access to funding or credit. Consumer confidence levels has not been great.
Now, one of your competitors, and I'm not sure how directly they compete with you, is Cashbuild.
Yes.
And they always used to tell the story, their chief executive, Pat Goldrick, who I'm sure you know well, he would talk about that social wage in the rural areas, how that kept their growth going, even at the worst time of the recession, because those social grants kept coming in, people would pool them, so actually they had more money than was realised, and those buckies coming to get sand and cement kept on coming. Are you exposed to the same sort of, as it were, subsidy, and is it holding up?
To an extent, so we're less exposed to a footprint that's mainly in the rural areas. We have significant exposure to urban areas. Good growth trends in those rural stores, especially up in Limpopo for the last 3 odd years, but can also see at the moment that growth is softening in those areas.
So what do you do when this happens? I mean, you've got these stores, obviously there are certain overheads, but then you've got to scale down on the materials that you buy, you've got to perhaps retrench. How do you manage? And you do say in your results, you've had to manage performance carefully.
Yes. Well, first and foremost, for us, it's about the portfolio. We have a very diverse portfolio, not only between generalist stores and specialist stores, but also regionally, between urban areas and rural areas. So that does, to an extent, assist. In those specific areas, very important that we make sure we keep up with what the market wants at a specific point in time, and that, for example, we optimize our promotional spend. We need to be in the face of our consumers out there and make sure we get the business.
What are the key indicators? I mean, is it the guy in the bucky coming along? So now, yesterday or last year, there were 10 guys a day in a bucky, and now there are only 4. What are the sorts of things that you look for as advance warning of a poor year?
Yes, bucky builder is one indicator. There's a lot of walk-in trade. Also size of purchase, for example. You also, and typically with your bucky builder brigade, you build up a database of customers, and you pick up when you see some of them less frequent than you may have in the past. So yes, some challenges in those areas. At the same time, still a good business for us.
What about looking at the headline earnings and the dividend? You're a bit under pressure there too.
Yes.
Although it's what I wanted to say was to explain the loss from the loss to the positive in headline earnings. Yeah.
So bearing in mind that in 2011 we took significant impairments, there was also some restructuring costs involved, which is reflected in the headline earnings base. But on top of that, there is a trading performance improvement for us. We still have a lowly geared balance sheet. Also very pleased we're significantly investing in projects around integration of our ERP platform. The general merchant side of the business is rebranded. Well, 95% of the relevant stores are rebranded. So look out for a marketing campaign that will make a lot of noise around the Buco brand as we move through the year.
So well, they say people should advertise in tough times, and that's what you're doing to protect the brand. Looking at the market going forward, you've got you say things are tough. Are they going to get tougher?
Well, I would like to think that the sentiment in certain areas will actually pick up. Some of the challenges we faced in areas, for example, exposed to the mining industry, I think things have settled down quite a bit. To an extent, also looking forward to some of the infrastructural spend from government's perspective flowing through to the ground. So yes, there's always opportunities for growth. However, we do believe it will be gradual growth. There's no fireworks out there.
Doesn't sound like government infrastructure would be for you, because one imagines vast amounts of cement, soil, whatever it is, being moved. That's not what you do.
Yeah, it's not a direct benefit, but often accommodation, housing, offices and so forth follow behind the infrastructure spend.
Inventory must be an issue. Some of what you do is big and heavy and you've got to order it and it sits there.
Yes, so very important that we focus on our stock levels and keeping the right stock mix, and that we also adjust to the trading trends out there. So a significant area for us, but also an area that we've controlled reasonably well over time.
What worries you most at the moment about the environment you're operating in?
Well, I think a bit of a tailwind in terms of industry trading trends would be most welcome, and we look forward to that. Hopefully, we can pick up a little bit from what we've seen in the first quarter of this year. That's very important for us. As you alluded to just now, in that context, it's important for us to look after our balance sheet.
Looking at the borrowing by consumers, everyone says they're stretched. There is concern about unsecured lending. How much are you exposed to people who were or are spending money that they actually don't have?
Yes, again, the type of rural store where you find that more prevalent, we're not that significantly exposed to, although to an extent. But yes, we're not the best of savers in South Africa. Our savings, our borrowings levels are high, and in the last few years, David, consumers have felt the brunt of tough economic times, and so they're not that confident in extending themselves further.
Revenue, you've said, was up 6.2%. This time next year, would you be looking at a similar increase, or are you expecting better?
Similar levels would be acceptable. A slight increase on that would be most welcome, but there's a long way to go to that.
Yeah, those numbers look quite small given those big growth numbers that you had in the mid-2000s and all those companies like it.
Correct. There was a cycle from 2004 to 2008 where the growth levels were significant. Those are probably not levels we won't see it for a while.
I remember your predecessor, Ralph Patmore, coming into the studio, and he was always smiling in those days. I'm not saying you're not, but boy, he had reason to smile. They were big numbers.
Yeah.
But these are tough times. Thanks to Eugene Beneke. He is CEO of Iliad Africa.